on the dusty mesa, her looming shadow grows, hidden in the branches of the poison creosote. She twines her spines up slowly towards the boiling sun, and when I touched her skin, my fingers ran with blood.
In the hushing dusk under a swollen silver moon, I came walking with the wind to watch the cactus bloom. A strange wonder haunted me, the looming shadows danced. I fell down to the thorny brush and felt the trembling.
What's up, everybody? I remember when this came out. This came out in like 2015, 2016. Yeah.
When the last light warms the rocks and the rattlesnakes unfold.
Yeah. Season 1 is the best. That's blew my mind. Oh. Big man on campus. What's up, Kurt? What's up, dog?
And the wind will be my hand.
What's up, retards? Yeah. Happy Friday, Robert. What's up, man? Good to see you. Dingus Pingus. The pingiest of dinguses.
Yeah.
Very good. Oh, we don't need to see that. Let's put something else up instead, like a chart, so we look more official. Official stream, not chart. Cheers, man. I appreciate that. I appreciate the compliment. Cheers, man. Big cheers. I'm going to give you a tea cheers today. Tea cheers. Guys, remember the Thailand days? Remember when the stock was going down and no one was, and there were just very few of us? That was a good time. Thailand days were a good time. Yeah. This is today's stream is we're finally delivering on the. It would be T+8 because it was supposed to be on Thursday. T+8, T+8 calendar days. How many trading days? 5 trading days, though, right? Yeah, T+5 trading days. What's up, CDL J27? Pew from Weenie in the Butt. What is that from? Is that from Family Guy? Weenie in the Butt, or is that Rick and Morty? I don't remember. Saw dudes. What's up, Tom? Christian's here too. What's up, Christian? Looking good in the profile picture, dog. That is a snappy blazer. Oh, yeah. So this is a good, pretty basic question. Easy to answer, so we'll do it here. It's just right here. So it's at starcharts.com. Here it is. Good question. Not always easy to find. Starcharts.com. You can just look up Rory. Wait a second. Yeah, Rory Kittinger. I hadn't noticed. I guess it was the case, but I hadn't noticed that it said Rory and Kitty there on top. But I guess it did. Last update was 26th April 2024 at 2 p.m. hyper change sensitive here. All right. But yeah, and he's got it there, and then he's got, let's see, does he have RSI? I guess he does. He's got his weekly RSI. Oh yeah, he's got RSI down here. As this is, what's this? He's got daily RSI here. Yeah, got some room to run. Got some room. Yeah, we're not anywhere near overbought territory. We got close here, but you can see weekly we're chilling. We're chilling. Big chilling. Starting to tick on back up there. What was our closing price again? It's our official close today. 27.46. Not bad. That's pretty cool. It's a cool close. Pretty sure that's a green on the weekly, huh? Yeah, we're still doing the thing there. And we're back up above the 200-week simple moving average. So, all right, 1, 2, 3. Last year we had 1, 2, 3, 4, 5 to get up there. We only took us a couple weeks to get back up here, huh? Pretty cool. Not as far to go, but I gotta imagine this is gonna be a cool bull cross too when we get the 50-week crossing the 200. We already have the 20 is up here. The 20 is above. That's it. We also had that 2685 there. That's not bad. That's pretty cool. Oh, Diaper King. Let's go, dog. Yes. Thank God it's Friday, and thank God it's 21st Century Renaissance and TGISF. Thank God it's short Fridays. Yeah, Coffee, Donuts, and Homer. What's good, dog? Yeah, that's super awesome. Look at this. That's super cool. We definitely love that close over 27. I mean, this is what we saw, right? I mean, we love this November cycle here. That's what we kept seeing. This is characteristic of these price up phases. So we see that when we get the price up phases, we got weekly closes that end up being significantly above max pain. So we do have a drift. We have a skew towards the upside. Very interesting. Yeah, we closed over that 27 mark. And got pretty close to the 27.50 mark too. Looked like we were heading back down there. Obviously, right. The big surprise on the day was our friend over in SPY, just cruising late in the day here. Looking not as bad. We do actually have some of our momentum indicators over on SPY kind of flattening out here. So not bad. I mean, it's looked worse. Still not brilliant. Super cool if actually it just pulls up before crossing the zero line. Hadn't considered that, right? If we get the SPY weekly pulling up before it hits the zero line, that's pretty cool. When's the last time we did below that? Oh yeah, bear market, we spent a bit of time below that. But that would be cool because that would mean that we're saved from bear market if we pull up here, because you can see, right? 2022, way worse. 2022, we just cowabunga. Down we go. And we did not pull up here. We came down here really fast. Maybe we pull up. Maybe we pull up before we get the zero line cross. I don't know. Looks like we're flattening out there. We might. We'll see. There's been that's a lot of counter momentum kind of back to the upside here. Maybe very interesting too to see that close over 550. Where did our gamma? Where did our gamma end up here? Do we know? Let's pop over here. SPY. Yeah. Let's give this a quick refresh. Not bad. Not bad. Yeah, see, so we finished basically right on top of this little call wall here. That's it. Yeah, we actually closed above the call wall. So that's a breach and hold on the call wall scenario. So we're in it. We're into CallGex territory. Yeah, so from what I know from Spot Gamma, let's see, 88% of the time. So 88% of the time we do not close above call walls. When we do get call wall breach and holds, we have 1 day on average we trade down the next day. But in the 5 days trailing, we show some positive return. It's diminutive, but positive return. So I mean that's a good sign. That's definitely better than I would have expected. Yeah, dog. So we chart hard here, dog. Everybody comes in and asks us like, "Yo, dog, how do you chart?" I chart one way, hard. Yeah, I thought we had a pretty good shot at that. Maybe earlier. I mean, I did think we were gonna pretty squarely move into this 27 to 30 bracket for a good 5 days. I mean, Monday we kind of come on pit, right? I mean, so part of what gives me this indication is what our gamma levels look like, right? So if we bump over here, it'd be interesting to see how this changes our gamma levels here. And so you can see it's like if we get wedged in this area, like we just get pinned in this very thick gamma hedging regime, right? So it's like so many shares are hedged at that position. Like unless somebody wants to come in and take like, I don't know, 1 million or 2 million shares and really shove us out of here, then hedging is going to keep us pinned in that bracket. So that's why, like on the other side, like earlier in the week when I was talking about us moving into the 27 to 30 range, it was like if we can move above 27, once we do, then we're going to be kind of stuck up above there, which is awesome, right? Which is awesome. Thought we might see a little bit more extension to the upside. Maybe we will on Monday. That's kind of, it does look like we might, right, for two reasons, like we could end up moving back to the downside after Monday, right? So we'll get a gamma wipe. So, right, so all of this built up gamma exposure is going to be gone, right? All of these are really big positive gamma positions. We can see what happened today, right? Today we just traded, and this is what I outlined as our, like during today's video. So for those of you who had a chance to watch today's video, this is what I was talking about as our most likely scenario. And the most likely scenario is, all right, 27 is a really big position, right? 27 here, really big position, very strong, very supportive, right? So 12.5% of all of the call gamma across all of our expiries is concentrated right here. So very supportive intraday. We have not had super high volume days to make that amount of gamma kind of flimsy. So that's pretty big based on what we've seen. We had a low volume day today, like 5.8 million is close to, that's like 58 or 60% of our average daily volume. So, you know, not a big volume day, not enough to push through this, but at the same time, also not enough volume to push through the bigger net positive position where we had almost 16% of our gamma to the upside. So what ends up happening? Well, all right, you have these two positions. What do traders do? They just move us, back around here. Okay. And you can make some really good, day trades. This week I did, I was just playing around, but May $30 calls were really good to short. was picking up 15 or 20% shorting these things in like an hour, right? Looking like, all right, we're coming up here. Like yesterday, 27.50 headed up there, right? VWAP order started to peter out. I talked about this in the video today, right? You see that, right? So you can see when the VWAP order is going to stop because it'll start to flatten, and it'll usually, actually, let's go over to this chart. You can see this. I mean, sometimes I don't even know the things I know, but I know it like in the moment. So let's get this right. There we go. So you'll see here, right? So we just had this VWAP order chug through. How do we know when like the VWAP order was done? Like when do we know it's coming to a close? Well, we can see, right? We move from just being this diagonal line pattern here. And there it is, right? Like it's just it is a straight line, is a straight diagonal line. And we have the 20-minute and the 50-minute are they're just diagonal lining it, right? And I mean, even the 100-minute is kind of doing its thing there. And so what happens, like, how do we recognize it? All right, well, this diagonal line, right, we'll see it. And then all of a sudden it flattens out. And so we saw this flattening out pattern up here. And what happens, we got the 20-minute coming down really close. It's starting to close in on the 50. 50 still cruising up, but the 20 minutes flattening out. And so you see here, they don't quite cross, but they narrow out, and then the bars, the candles themselves are going sideways. So that, I don't know, like this is the thing. I don't even, like, I just see this stuff and I trade it like on an instinct. I'm like, kind of looks like it's going to go down now. Like, I don't, necessarily do this level of, like, I don't do a conscious verbal analytical, like, check through this. I just saw this and I was like, I think we're going to go down. And then we did. But then I can look in hindsight after I've like, because like enter it into like a procedural thing where like I recognize it and like my brain just goes like, oh yeah, now. And I'm like, okay, brain, I'll do it. And then, just do some short calls and there we go. So, right, enter up here. Like this is what I did yesterday. Entered up here, sold short calls, 30s for May 16. We come down here, and then I went, oh, okay, well, we're going to go to 27. We know that big call gamma position is there. We know that the 100-day simple moving average is not far below us. So then we got here, and I was like, all right, I'm done. Boom, out. I think my entry was like 112, and my exit was like 93 or 95 or something like that. So, like, that's pretty cool for the day, You can do this with short calls. Actually, like, short call day trading is cool because, like, if you mess up, you can just wait until it's right? Like, if you're like, oh yeah, I'm so in on this, like, I got this. That's the thing. Like, if you try to scalp long options contracts, like, I essentially decided to stop doing this a while back because, like, the returns are cool, but you have to be really active. You have to be like scoping around for stuff. You need to be looking at a ton of stuff, and you need to be like abstracting these patterns regardless of what's going on with the underlying stock. And that was just very difficult because I would catch myself just like, oh man, I'm out of the right context, and you got to do stops, and you got to do things like account for slippage, and you got to figure out which contract you want. And just, I found it like, once I found GameStop, I was like, oh wow, it's way easier to do like day trades with this stuff. Cause like if you use a short call, and GameStop's calls move a decent amount, if you miss, you just wait. You can't do that with a long call scalp. If you do that with a long call scalp, you lose all of your equity. You can't do that. Like you'll miss, you'll die. Right. And that's what people do. That's, I think, what dealers count on is that people will do that. Like they get into their trade and then they're like, oh, maybe it'll come back. Maybe it'll come back. Maybe it'll come back. Oh, it's not. Oh, now I'm down 30%. Oh, now I'm down 50%. Oh, now I'm down 70%. Oh, now I'm down 90%. Oh, I guess I'll sell it here, or I'll just hold it on the odds that maybe there's a 0.01% chance it'll come back and I'll have some money or something. Brutal. Short calls, they work the opposite way. You miss, like maybe you're down for a day, but then like wait a couple days, then you're like, oh, okay, it's fine. Okay. Oh yeah, I won. All right, cool. You know, and the worst case is you get assigned, and you get assigned. Like, this is the thing too. I never pick strikes where that are not like significantly above my cost basis for share. So I'm always making a profit. Always. Right. Great to do. There you go. Little fun, little intraday thing. So I did a little of that yesterday, a little of that today. Good stuff. And then because of the positions of those very large call positions, very high likelihood that those are going to be inflection points intraday. So for those of you, like I noticed, right? So some people, Meliora goes ahead and posts some of my posts, my article every day over on Superstonk. Some other people will post some of my stuff on Superstonk, and some people will be like, "Oh, this guy, he's a total, he's somebody's like calling me like Kramer or something like that," which doesn't even make sense. But like, is it like, oh, he just says like it's going to go up or down. It's like, well, all right, if you want to know like why do I spend all this time talking about options gamma, is because very large options, especially on GameStop, call option strikes, very large call positions tend to be inflection points intraday, and you can time up. Here's the other thing. Here's why they're also important as inflection points. Why do inflection points matter throughout the day? Inflection points matter throughout the day, especially when they are linked to large call gamma positions, because that's where the gamma value for contracts spikes. So as that contract goes into the money, its gamma value is highest. And when it goes out of the money, you see the largest value loss based on gamma as well. So that $1 move is going to cause the largest share of delta loss in whatever contract you are trading with respect to that point, right? So let's say you think the inflection point is coming at 28. Okay, you're going to see if you enter right there and then it turns around right there and then it moves down $1, you are going to see the largest loss of value in that contract at that exact point, because that is when the gamma value is high. So when it moves down, it will have the largest possible single delta loss per $1 move will occur if it reverses right at the strike when it's about to go in the money. So you can be very profit, right? You have outsized returns when you are trading contracts intraday based on reversals that are tied to high concentrations of dealer gamma exposure. And more often than not, especially when dealing with call gamma positions tend to be places of reversal. Put gamma positions do not. Long put gamma on SPY, right? We see long put positions. Sometimes we see that little stutter, but not as much. We don't typically see that as a very large reversal point. It's a hang up. Sometimes we get a little bounce, but usually it causes volatility to go up, and then we slide. Call positions, right? It's great to short calls at high gamma concentrations, because it flips the other way, and then you get the gamma loss, which means that you end up profiting a good slice off of that. Then you don't have to hold it forever if you don't want to. And it's a very high probability trade. Number one, in the short frame, and if you miss in the longer frame, you're still probability advantaged. Amazing. Figuring this out was like unlocking, the Da Vinci Code or something like that, But anyway, Oh yeah, dog. We're gonna get to that for sure. We are gonna do that. Cheers, man. Thank you for the super chat, by the way. Robert Douglas. Nice to meet you. I don't know. I guess we could try to track like track Bitcoin and like compare its correlation to GME's price or something like that. That'd be cool. What's up, medical advice? What's up, dog? We might. We'll talk about that too. I do want to point out. Yeah, let me do that. Let me do that actually now. Before we get to the GMEU and tinfoil stuff, which was cool. Which I got super excited about this a few minutes ago. When I realized this. Let's see. So one thing I want to point out. Oh yeah, that's what I was doing, talking about GEX before I started talking about trading. Anyway, let me do this first, and then I'll tell you the other data point. The first one is this is going to go away. So some of this is going to go away, right? So we'll see these expiries. We have large concentrations here. These are going to disappear. These are not going to be as strong after this week. We do have to see what's rolled. But as you can see, 5-2 is not a really big expiry right now. Today was almost half of our call GEX. So that's going to go away. Some of it will be rolled. But you can see, look at how disproportionately large it is right there. If we go to next week, interesting. So this is what we have for next week. Okay, so we definitely still have this this predominant structure here, but interestingly, we also have like a bunch of put gamma at 25 and 26 for next week. We didn't heading into today. Okay. We did have some at 26 heading into the end of this week, but then it got closed as we saw. But look at the difference. Like, look at the distribution for this week. Our call gamma positions in comparison to our put positions versus next week. All right. So we definitely have some concentration of put gamma down at 26 and 25. So some traders are betting on a move back to the downside there. And in general, these call gamma positions are not as large as they were for this week. Now, they can go up. We can have a lot of stuff rolled. So that does make me think that there is a higher chance that we do get some reversal. If we're thinking about technicals, I mean, our technicals right now do look good heading into next week. And I've been pleasantly surprised with what we've seen from our price action here. So, right, 100-day right now is at 26.76. I kind of thought we'd go, a bit higher and then move back down here. I mean, I guess we could get shorted under this position and then go down to, yeah, I mean, we do have this nice cluster of moving averages here on the daily right at 25. I think clearly some traders have built out those put positions to account for that. We kind of see this on the weekly too, right? Our 50-week is right there at 25. That's a very palatable downside target. If we go to our 4-hour here, right, we got our 500 4-hour and the 54-hour are below us, right? Well, here this is different. The 54-hour that's respected is the one over on our charts here. I don't think I can show this. Where is it? 54-hour is actually right where we are. But the 104-hour over on Thinkorswim is down at like 25.70. So we could slip on down there. Technically, we have shown some pretty good support up here, right? 24-hour is up here. 100-day, obviously. And then the 20-week and the 200-week are up here. So we are showing some support here. Maybe we do get a little correction down there. The other data point that I do want to point out that Richard has been going through, he has been talking about this over on his channel. So make sure you watch his content. You check out his discussions of it, how he's working through this. But this is on his ETF chart. So, right, Richard has his spreadsheet where he's got all his ETF data available. And as I understand how his model works here, right, he's basically, so if we move out here, right, he's basically built this model that's based on ETF data, right? So he built this out maybe about a month ago. So so this is based off of whatever GME ETFs, like all of the ETFs. I guess it's ETFs and XRT. I don't remember actually if it's based on, is it based on FTD? No, I think it's based on shares outstanding. So it's based on outstanding shares of all these different ETFs. And as you can tell, right, he's got just these major ETFs. So for example, if you go over to FTD's liquidity, this liquidity tab here. No, I think it's down here actually. Yeah, right. So Richard's charts are great. Right. So if you take a look here, he tracks on a daily basis. He's tracking net changes in the outstanding shares of a number of ETFs that contain GameStop. So he's got net changes here. He's got XRT obviously over here. And so it uses these 1, 2, 3, I think it's 7. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So 8 different ETFs. So 7 ETFs and GameStop, or 7 ETFs and XRT. And then it combines that with the amount of cash, the net asset value of GameStop on hand. And as you can see, basically, and he pointed this out, basically right around when Credit Suisse went under and UBS took over these swap positions, suddenly GameStop's price action started to converge very closely to the shares outstanding and asset value of of these ETFs, right? So the shares outstanding curve, if you superimpose it on, like, look at this, look at how closely these are correlated. We do have some divergence basically right here. Right, Richard noticed this after we had the convertible bond offering, and it looks like, right, you can see where we just kind of teleport down here from the convertible bond arbitrage shorting. And since then, we have also followed pretty closely. I mean, it's not exact, but pretty closely the ARB adjusted curve here. So another reason why this might give us, right, and we'll have to see, and this is interesting to test. Richard himself is, of course, testing this and looking at this. We do look like, if you look at his model here, based on shares outstanding, I've been posting a little bit about what's been happening with XRT shares outstanding. They're on a little bit of a delay. I think it's about a 2-week delay. But this is basically projecting here that we will get some kind of, we do have a serious dip, basically up through May 5th. So from April 28th to May 5th, we have what looks like is going to be a substantial dip in GameStop here. And then it's going to shoot right back up. Okay, this is basically what this model is projecting right here. We will have a dip for a week after the 28th. We will peak on the 28th, and then we will move down, bounce back up, and then move down and kind of bottom out around May 5th. Why then is that? Why do I find that May 5th date particularly interesting? As Metro Ballin has pointed out to me, we do have a large contingent of Chewy swaps actually that are set to expire on May 5th. Very interestingly that those outline, those overlap, I should say. Curious to see what happens there. I'm essentially prepared if something like this happens. I'm trying to keep this in mind. If we do get this correction to the downside, if we look historically, I've been talking about this in some of my videos this week as well, especially comparing what our price action has looked like with respect to our last big move here. So you'll notice that actually our last two, right? So we have these two different phases of these last, this full price cycle. So this is one full price cycle here, this hump. And if you'll notice, we did get, and I pointed this out, we did get these sort of 1 week interludes right in the middle of our phases. So we have largely a price up phase and a volatility phase, and then we had a 1 week interlude where we got shorted down super hard, and that was from 11.29 through 12.5. And then of course, Warren Kitty tweeted and we went kaboom, and then we started moving up again. right? We had a 1 week interlude. 1 week interlude. Interestingly, over on the other side of this too, on our way down, we also had a 1 week interlude from the 10th to the 14th of February. Very interestingly, right? So 1 week interlude, we move back to the upside. We can't see this here, but this actually went all the way back to 31. We bump down to the 4-hour chart. We can see it more clearly. So shorted here, and then we bump back up and resumed our trend. Down, 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 and then for 1 week we're going to take a hiatus and go back to where we were here. We're going to go right back here for a little bit, and we're going to trade up. We're going to have high volatility for a week, and then we're going to go back and pretend like nothing happened. It's going to just resume this trend. So up, 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 up. Whoops. Oh, and then up, 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 up. Okay. 5 weeks up. Teleport down for 1 week. 5 weeks up. Then we go start teleporting down, 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 down. Teleport up for 1 week. Then back 5 more weeks. Down, 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 and then start to kind of go into this sideways pattern. Get a little excited over earnings. And now here we are again. Up, 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 up. Could then we get this 1 week interlude starting next week where then we teleport, like we maybe open high and then teleport down. Maybe not super low, maybe not down here. But I will also point out that where the, at least on this chart, this will like around 25, right? A little bit above 25. This is essentially where our net asset value should be, right? This is our NAV floor times 2. So this is cash on hand. If we're essentially valuing the business at 0 and we have 6.3 billion in cash, that puts our net asset value floor at around like 25.20 conservatively, somewhere maybe in the mid 25s. So I mean, Morningstar fair value is a little bit below that, but yeah, I could see that. I could see that move to 25, and that would line up with what we've seen with these kind of 10 or 11 week patterns. These price up and price down phases with that 1 week interlude in the middle. It's time for that. It's time for the 1 week interlude. We also have Richard's model tracking these ETFs, saying that based on shares outstanding, yeah, it's going to dip for a week. It's going to go from like the 29th to May 5th, which aligns with this Chewy swap date on the 5th, where you have tens of millions or billions, who knows, in notional value of Chewy swaps expiring on this date. Yeah, I mean, seems like, right. I mean, all of this is all probabilities anyway, but it's a pretty decent argument, I would say, to at least for me to prepare for something like that. But of course, we have to remember the broader context. We're probably still moving to the upside after that. We still have momentum on our side. We talked about this again in our daily videos here. But we might also have something else, which is very interesting. And this gets to Robert Douglas's question here. To do with GMEU. So what is going on here, right, with this new ETF, this new 2x leverage ETF? I will, of course, state foremost, I'm not an expert on how this works, but I'm just starting to dig into this and figure out what exactly is going on. But I think this is something that Roaring Kitty himself has been maybe expecting or waiting to point out. Has been pointing to for us. Let me just take a second to take a look here. Oh, cheers, Justin. Thanks, man. Welcome. Yeah, I just discovered Jake's work myself, so very excited to get working there. Hey, man, cheers. Cheers, Gamma Chad. Nice trade, dog. Dingus Pingus. You short long calls by selling them and acquiring premium. How do you then close the position? Don't they still have the right to purchase them from you until the strike? No, if you close them, they're closed. You sell them and then you buy them back and you pay the difference. So you don't get the full premium, right? You buy them back with the premium that you sold them for. But you keep the difference because ideally you're buying them back for a lower price than you sold them for. Right? Shorting. That's how shorting works. Yeah. It's cool when you get to do it like for you. It doesn't affect the underlying. Not in a meaningful way, anyway. If you did it with like 10,000 contracts or something, maybe it would, but not with 20. Hey, who loves avocados? What's up, man? Absolutely. That's why short options is a winning game. Short options is a winning game. Long options most of the time is a losing game. Except in very special circumstances. That's correct. Especially if you have if you're selling out of the money contracts. The only this is actually an important thing. If you are trading short contracts, you can get assigned early if you are trading deep in the money contracts. So if you're trying to, like, if you're shorting like $100 puts or something, like, you can get assigned. If you're shorting $5 calls, you can get assigned early. That does happen on SPY a lot. Some people complain about that on SPY a lot. If you're shorting $30 contracts on GameStop, you're not getting assigned early. You're not getting assigned early. It's up to Swag. Oh, what's up, Stevie? We could. I think that's kind of what I would expect at this point. I would call that a maximum possible extension, a maximum probable extension. Possible is not the right term. Maximum probable extension is like to that 29.50 area. Maybe we get some kind of settlement thing that does that to us. I'm not necessarily expecting that we see that, but I would say that kind of whatever high we see on Monday, I wouldn't be surprised if we see a week of cool off off of that. So if we see 29.50, maybe that cool off only goes back to 27 for a week. If it only goes up to like 27.85 or 28.20 or something, then maybe we see like 25 something again, right? It's gonna, that's why we need to observe what happens intraday. I don't know, brother man, are we? We'll have to take a look at that. Are we? So this would be like weekly, like the 50 or something. I mean, it'd be cool to see these cross. Yeah, the 50 and the 200. I don't think that's happening next week. I think we probably have 2 weeks. Actually, that should coincide with the 5th. So right where we get the ETF liquidity bumping back up. So Richard's model is telling us that on the 5th, the ETF model is bumping back up. So we should quickly, if Richard's model is correct, and this is forward predicting accurately, then we should bump pretty quickly on Monday up out of that hole. So we'll go into a hole next week into the 2nd of May expiry. And then on the 5th, let me blow this up a little bit so you can see better. So yeah, so we would have, right, this will start to move up, but we won't get the cross. So we'll have a week where we don't see the cross. The cross would happen on the week of May 5th. So we'd have kind of containment maybe in this area until into May 2nd. So a little cool off here into this area, maybe cool off right here. And then Monday, we move back up. So Monday, we move back up. So that should basically coincide to 1 week down. That's when those Chewy swaps are going to, that's their roll date, if they're going to get rolled or closed or whatever. It's when they expire. And then that week should coincide, regardless of what the price is. If it's anywhere in this area, we'll get the cross of the 50. The 50 week will cross the 200 week. And we might also get we might get a PMO cross. We might get a weekly PMO cross. We might get the 20 weekly crossing the 35. And on the daily, we'll get close. I don't think we'll quite get it, but we'll get close to a 55-0 line cross on the daily when that happens. So, I mean, it's still looking bullish. Still looking bullish. But that's probably another indicator to check out there. So thank you, Jimbo Eves. Let's see. Yeah, so how did this? All right, this is a good time. We're excited about the GMEU, the GMEU thing here. So how did this come into being? So there's this group, right? So very interestingly, this is why Jake 2B's post was so. So Fox and Flask pointed this out to me. Oh, that's us. That's me right there. So let's actually go to Jake's post. So yeah, so apparently Evader Dirt pointed this out, but Tuttle Capital Management, right? So they're this group. I actually pulled up a tab on these guys. Where are they? Here it is. So this is what these guys do. Like, it looks like their business model is to like just found ETFs. That's what they do. Like they just open ETFs, and their whole thing is, I mean, they say this, right? We design. I love this, right? Always, anytime you see this word empower, I'm immediately like, manipulation. They're trying to manipulate people. Okay. So anytime anybody says the word empower, I'm like, oh, okay, you're trying to manipulate people. You're trying to get people to trust you by telling them that you're going to give them power. Maybe some of this is good natured, but like immediately my like warning, like the hairs on the back of my neck stand up when somebody uses, we're here to empower, challenge the status quo. Like, I'm pretty sure you're not, dog. You make ETFs. They make ETFs. So they're supposed to right there to empower individuals by challenging the status quo. No, dog. You make ETFs so that you can do fail to deliver shenanigans. That's what these guys do, right? They have a management fee on all of these different ones, and they do single stock ETFs. I'm pretty sure, I think maybe it's What Can I Make Today has been writing about single stock ETFs for a little bit. I wonder, maybe Always Had But Truthful has said something. I think it's What Can I Make Today. Somebody on Supersonic has been writing about it. If you know, write it in the chat, please, so I can give this person proper credit. But single stock ETFs, this is a new thing, relatively new. And what they do is they have some mixed ones, but they do a ton of single stock ETFs, right? So they do the T-Rex strategies here. And yeah, man, 2x long snow, 2x long GME. The snow one just opened, actually. And they do these every couple of months. March 4th, Roblox 2x long, DJT 2x long, ARM 2x long, Hood 2x long back in January 31st. Last October, actually, when a bunch of GME swaps got closed, interestingly. Ether, daily target, 2x inverse. They do a 2x inverse, and then they do a 2x long. 2x long Netflix, 2x inverse master, 2x long master, going back to September 18th. MicroStrategy, I should say. 2x inverse Bitcoin, 2x long Bitcoin, 2x long Microsoft, 2x long Google. This is what they do. Okay? They have these 2x long ETFs. So yes, it's leverage. A couple things about these ETFs. First off, they're going to be subject to decay. So people are going to put their money in them. And you look at any ETF, right? So let's look at, well, this is a good example. Okay. So right Richard looks at the long bond ETFs a lot. I mean, he likes bonds because he likes yields. He's been talking about these a lot on his videos. What's tough with leveraged ETFs is, this one's interesting. The bonds are a little different because these actually did appreciate pretty well for a while. But you'll see this like crazy depreciation. They have like these ETFs. Bond ETFs have been crazy decaying for years, even though bonds have not depreciated like this. Bonds are, down, but not like this, right? They're down. This is down like 90%. Why is a 20-year bond ETF down 90%? And part of this has to do with the rebalancing mechanism, right? So they rebalance all the time. And someone pointed this out over on Supersonic, I think, the other day. When you're triple leveraged, your losses very often outweigh your gains back in the other direction. So you get stuck into this cycle where you're triple leveraged to the downside, loss. Okay, triple leverage back, you rebalance, triple leverage back to the upside. Your gains never quite, never eclipse your wins. So you kind of periodize up for a little bit, and then you go bigger down, and then up for a decent amount. Like you'll recover like 80%, and then lose that gain plus a bit, and then back up 80%. And then, so you get into this cycle. Okay, so this happens. They take a management fee. So they get paid regardless. They get a very large management fee for doing GMEU. They get paid, I think, 1.5% as a management fee. They use swaps. And as Jake2B pointed out today, they also allow for strategic fail sliver. They allow for borrowing. So what happens with ETFs, right? Strategic fail sliver. I talk about this a decent amount. Richard talks about this all the time. A lot of people talk about this all the time, especially with GameStop, like these cycles and the FTDs and what's really going on there. So basically, Richard's whole data set is based on tracking these flows through ETFs and attempting to anticipate what's going on with these FTD cycles and settlement. So you can cheese the settlement system by using ETFs. So let's say that you go to an ETF, because an ETF works like a mutual fund, right? So you put in shares of it are based on creation orders. So you come in, you put in a creation order, right? So you'll see, in fact, Richard's data set is really great for visualizing this. Okay, so let's look at XRT, because I've been posting a bit about XRT. And XRT is a very popular one. Let's move this in there. Okay. So you'll see that right here on the 4th of April, the outstanding shares of XRT are 2.3 million. Okay, that means there are 2.3 million units of XRT in circulation. Cool. That means that proportionally, they should have per unit however many shares of GameStop, however many shares of Carvana, whatever else, all these retail stocks, right? Okay. Then what will happen is, let's say an institution will get an order, supposedly, right? They'll get an order from, let's say it's a retail buyer, let's say it's a different institution. They'll go, okay, well, we have this cash and we're putting it over into this ETF. We would like you to take this cash and transform it into shares of your fund. So what they will do is they will go out and they will create units, right? So they'll go to an authorized participant, and the authorized participant is supposed to go out and purchase shares of the underlying and then package that into new units of the ETF. Okay, so that process is called a creation order. Okay. At any point in time, the institution that authorized the creation order, so they'll receive a unit of the exchange traded fund. However, they can put in what's called a redemption order, where they go to the authorized participant again and they say, hello, we would like to redeem the underlying securities in this share here's the share back. So the authorized participant will get the share back. They will destroy a share of the underlying, or excuse me, of the ETF, and they will take all of the underlying securities and hand them over to the institution that originally had put out the creation order and now had come up with the redemption order. Okay. What's very interesting, right, is it is possible for the ETF to fail to deliver securities on both sides of this redemption and creation process. So during the creation process, the ETF does not have to go out and actually get shares of the underlying. They can, instead of taking shares of the underlying, I mean, eventually they do, right? I think like this is why quarterly rebalancing is possible. They do actually have deadlines where they have to go get them. But let's say you get an order in the middle of the quarter. You don't actually need to go out and get the shares. You can just stick cash into the share and then be like, oh yeah, now the share exists. It exists, but you supply instead cash in lieu of securities. This is what the term that's used in the DTCC rulebook, cash in lieu of securities. So in that ETF share, you don't actually have shares of the underlying. You, in many cases, just have cash and then quote unquote shares, right? IOU shares. But while that ETF share exists, the institution that had originally ordered the creation can go to the authorized participant, redeem that share, give it back, even though it hasn't yet been filled up by the authorized participant with real shares, and go, hello, I would like the underlying shares. So then the authorized participant can deliver fake shares, not actually filled shares. So they didn't end up going and buying the shares in the first place. When the creation order came in, they just stuffed it with cash and unsettled shares. Now they hand over those unsettled shares, but they themselves still don't have them. So they're handing over fake shares over to this particular institution who can then go and short them or use them to settle their own fails to deliver on other ETF obligations or their own FTDs on certain securities. Okay, so this creates all of these issues in the meantime, but what it allows them to do is it allows them to kick the can down the road considerably. So they don't have to actually contend in that moment with those FTDs. They can wait and hopefully the price will come down. They can control the price this way. They can redirect order flow, right? This can get all tied up in this as well. Okay. Well, it becomes easier to do this. You have more options to do this, the greater the number of ETFs that you have to draw on, right? So what Richard has done a really excellent job here is Richard has shown, all right, so now they're relying on this ETF, right? Okay, so here, there wasn't a lot of movement on the seven big ETFs here, but XRT itself got redeemed like heck. And then all of a sudden, whoa, massive creation comes in. XRT quadruples in its outstanding in a number of days. Whoa, okay. And whoa, some creation orders come in on these other ones. And then all of a sudden they go, all right, well, we're going to redeem the heck out of IJH. And while we're redeeming the heck out of IJH, we're going to start creating on XRT. We're going to start creating on VTI. We're going to start creating on FNDA. All right, then we need to start redeeming. We just did these. We're going to start redeeming now on XRT. And we're going to start redeeming now on IWM. But we're going to keep creating on VTI, right? And they can do this. We're going to do now we'll do a creation on IGH, and then we'll go back to some redemption here, right? So they can just kind of juggle this around. Okay, well, the more you have in here, okay, the more ETFs you have available to draw from, the easier you can facilitate this. So this is how you create synthetic liquidity. This directly affects the liquidity of the stock, right? And I mean, Gherkin had talked about this all the way back in 2023, the river runs dry. I think it's 2023, river runs dry. Maybe it's 20. Yeah, I think it's river runs dry, it's 2023. So, this is how they do this stuff. And this adds liquidity. Okay, so when these ETFs, when they need to cover FTDs, right? So a lot of these will have to do this. They'll cover their own FTDs when it comes to what it seems to be J2B's post is suggesting is around quarterly rebalancing. So big OPEXs. So like June OPEX and January OPEX are big ones. So these are big quarterly rebalancing. December is a big rebalancing. I guess, into January OPEX, but maybe end of December is a big rebalancing. So a big move that we saw right heading into December OPEX was there were a lot of FTDs, I suppose, that needed to be cleared on a number of different ETFs. Things may be wrapped up with swaps as well. So there were these swaps that needed to be rolled into October. And then once they were done, okay, then it was time to clear all these FTDs. And so November and December was all of this acquisition. We saw a number of these VWAP orders come in, right? So triple witching in December 21st was a big update, right? This was it. We were all excited about this. I remember. 23rd, I think. Here. 20th. Yeah, 20th. Right, this began this really big trend. So we had a huge VWAP order come in and just the whole day. This thing cranked the whole day. And this was so big because this is how we actually finally broke and closed over 30. Was this. It was this quarterly rebalancing. It was this triple witching ETF rebalancing here, this 4-day stretch, starting on the 20th, culminating on the 26th of December. Oh, by the way, right? Didn't we just talk about this earlier this week when we saw that was one of those times we saw a put to COGX ratio of 0.17. So there are 2 days, with the exception of those are the lowest, which means most bullish values we've seen going into a trading day was on the 26th and on the 7th. The last time we saw put to COGX ratios that high, or that low or lower was in this area when the whole options chain got blown out by Roaring Kitty, right in here. Okay. So there's something about this area. There's something about May, June, and December, January, where there are, what seems to be the case is there is something that has to do with quarterly OPEX rebalancing, or excuse me, maybe quarterly or semi-annual ETF rebalancing that requires a large settlement of fails. Okay. We know in February there were billions, tens of billions of cat errors. We know in March there were a lot of ETF FTDs. I mean, in the millions on some of these. I think IWM had a ton. XRT had a ton of fails. We had a lot of fails. In fact, I think that's also on Richard's sheet here. Well, yeah. So on the, what is this? The 18th, 6 million fails on IWM. That's very high. 28th, 2.3. The 21st, 2.6 million fails. A lot of IWM fails. Actually, there's been a ton of those. Let's see. What else here? Anything else exciting? VTI. I think he thinks that the VT, the VT fails in this range were probably cleared up. IJH. Okay, so right, we saw all that redemption that we just pointed out on IJH. Fair number of fails on IJH during early March. So and this is when GameStop was down, right? GameStop traded down from the 4th to the 14th. That was this move. Here's the 4th. Little rally there for 2 days. And then down, 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 down. 14th is when we started moving back up. Okay, so fails in IJH all through this. So what does that say? If we have a period of moving down, the price is moving down, and we have a high period of fails, it means that, okay, they just failed to deliver on that particular ETF in order to get the price to transpose down here. So, okay, when do those get cleared? Are those getting cleared now? Are those going to clear in a little bit? Right? Okay, so in any case, there's something here that has to do with rebalancing. We see these VWAP orders come in. This is where they clear those. It takes them a while to do it. They start earlier because they don't want to do it all at once. If they have millions and millions, if they have tens of millions of shares to clear, because that's what it requires time and time again to transpose the price down like this. It requires tens of millions of shares to do this. So they have to acquire over a long period of time. They have to acquire tens of millions of shares, and they can't do that in a day, or they don't want to do that in a day, because it causes, cascading fails or something like that. Okay. So what seems to be the case here, and how this came into being, and what J2B seems to be suggesting, is that this GME daily target ETF, this 2x long ETF, appears to have been created specifically in order to create an expansion in the potential to wield synthetic liquidity in order to control the price of GameStop. That is what J2B is suggesting. And he is suggesting that that has happened at this point in time specifically because it is likely that there were and have been a very significant number of fails around the time of the release of the convertible bond offering. In fact, we should be able to see this. I think we have ETF. Do we have FTD data yet? Yeah. What do you know? We've got almost 600,000 fails on GameStop reported for the 28th and the 27th. So that's a high number of fails. Those are the ones that are reported. We have lots of days with data missing. And supposedly they're cleared. Oh, but look at this, right? See, this isn't new. Supposedly this isn't new. These were incurred on the 27th, and then they weren't cleared. And that's as far as we have our data. So, I mean, not smoking gun stuff here, but the theory is that, okay, this is why this is created. And created in particular in order to account for the fact that there may be some significant upward price volatility peeking its head out around the corner as we approach another date for quarterly, or I guess semi-annual ETF rebalancing, something like that. That it may be the case that this needed to come into being in order to prepare to contain whatever volatility is coming our way. That'd be very cool. I would certainly like to see this. Yeah, I also want to bring up, in case you guys didn't have a chance to check out this this post I threw together here, right? So, we were just talking about earlier this week, right? We were talking about this meme. Wait, I have to share it. This meme. Of course, that's, kind of our theme today. But yeah, the idea here was, is it possible that Roaring Kitty saw this coming? Maybe it's just one of those things, right? Where eventually all information eventually connects to itself or something like that, connects back or whatever. But yeah, the bad guys, right? The bad guys in True Detective are the Tuttles. That's the name, right? So Russ Cole, played by Matthew McConaughey, and Marty Shaw, I think it is Marty Shaw, played by Woody Harrelson. Like, they're tracking down. They're tracking down this weird, like, pagan cult murderer guy, and then they are, then they get they track down these drug dealers and all this stuff, and they're trying to figure out. And all the while, there are very often children involved, right? So there's this, it turns out that there's this family, right? This very well-connected, politically well-connected family called the Tuttles. The Tuttles are a very old Louisiana family, and they practice these like voodoo Santeria cult rites, which involve the sort of ritual sodomy and murder of children, especially little girls, but boys as well. they use a network of private, non-denominational, ostensibly Christian schools in order to disguise their activities, and then they basically use this as a network to capture, to drug, capture, and then ritually sacrifice these children. And the big, they figure out that this very well-to-do family that's just, been involved at all stages of this, political, like they're in the police departments, and there's a senator, and there's a mayor, and they're, director of this school network and whatnot, links back to this family. And this family's name is the Tuttles. So, immediately as I saw J2B's post today, I was like, wait a second, what? And especially because RK's meme here, right? Roaring Katie's meme here, his GIF is, it's about the cycles. It's about the ETF cycles, right? This scene, right? So what happens is Matthew McConaughey has a cairn of Lone Star beer, and he's giving his testimony to these detectives who are, they suspect that he's involved somehow in the murders, but no, he's not. And so he smashes this down, and he's talking about time being a flat circle, and that's what this quote is from, right? Time is a flat circle. Everything, right? Everything we've done, we're gonna do again. And where does he actually get this? He gets this. He's very haunted by this because it's in the sort of the midpoint, a sort of subclimax of the series. He tracks down one of the drug dealers. I think he's a meth cook by the name of Reggie Ledoux, and he and Marty sneak up on Reggie Ledoux, and they have him at gunpoint. And then they find out that Reggie Ledoux has been involved in drugging and sodomizing these children, and one of these children is dead. And Marty ends up just killing him outright, and then they have to make it look like it was a firefight or whatever. But Marty's so disgusted that he just executes the guy. And but before Reggie Ledoux, his last words is he kneels down and he says time is a flat circle, but just before the black stars rise, and he's all methed out, and also cult whatever, King in Yellow, about this pagan cult that ends up being run by the Tuttle family. But he's haunted by this, and he keeps dwelling on this, but he's everything we've done, we're gonna, it's he's Nietzsche, and there's a great quote when Reggie Ledoux says this for the first time. He puts him on his knees, he pulls the gun, and he's time is a flat circle, and he's the fuck is that, Nietzsche? Shut the fuck up. It's a great line. But anyway, highly recommend the series. But I immediately I love that as a piece. That show blew my mind when that came out. So I always like this. I always like this meme by RK here, and to see that, and then to see the Tuttle Capital management was just what? There's more. There's more to discover here, right? I mean, I don't think he pointed this stuff out lightly. This dude, every time I think this dude's way cooler than I think any of us imagine. We already know he's cool, but he's way cooler than any of that. Very cool. All right, let me get some comments here. What's up, Bliat man? Dilute around 32. Why 32 though? And will he dilute? I mean, you mean he might do it do this convertible bond offering? He might do another one of these. I think we'll probably get another one of these. Maybe some. I mean, probably somewhere in the 30s seems likely. I don't know. Maybe we got Larry this week telling us that we're gonna have what is it? 12th, June 12th is when we're going to have the annual shareholder meeting. So that, maybe a target for get ready for a down cycle or something, get ready for an offering around there. Kind of giving us a signal ahead of time. Yeah. Rinkity predicted this 4 years ago. Really shows how long we have come that this is now coming to fruition. Yeah, we were truly on a nice edge. Yeah, man. I mean, he did too. He talked about this whole thing. He saw this. Well, I mean, he'd been following GameStop for a while, because he probably traded the 2012, 2013 squeeze. That's how long he's been following GameStop. Or at least he, was looking at it. If he didn't trade it, he at least knew the 2012, 2013 squeeze well. And of course, his headband is a reference to Occupy Wall Street. So maybe he knew about the GameStop's role in 2008. Always Sad But Truthful pointed out that GameStop was bound up with those original MBS credit default swaps. And GameStop had its first ever short squeeze was in 08 and 09. Yeah. So, yeah, a lot of stuff coming to fruition. Oh, nice. Yes. This is what I was looking at here. Nice find. Who loves avocados? Ooh, interesting. So they're all gone already. So when did that happen? Because that must have been very recently. That's very interesting. That's helpful. That's very helpful. That's very helpful. Was that today or was that yesterday? Because the one yesterday I think was short. If I can get this to load. We did have some 3,000 blocks come in here. This looks like another risk reversal trade, actually. So this trader is long for today. Was long 3,000 puts. 23. That must have been he must have closed those. Those were probably short, and he bought them back for a cent. I don't know why you would buy those so close to the finish there, unless you're closing, which I think he did. Yeah, there's a risk reversal. Wasn't AM, right? Oh, no. No, he bought it really early. It's like an emergency. I don't know why you would. Guess it was to open. And he did 3,000 contracts for next week. So that's a mid trade. So I gotta think this was buy to close, and this was sell to open. So he's short a 23 put probably for next week. Short 3,000 calls at 29 for next week. And this was the close? Is this for this week? I'm not sure because these are risk reversal trades. And these, like, because there's a guy who's doing these as four leg risk reversal trades, and he's doing them in blocks of like 3,000 to 4,000. So hard to know what side of this he's taking and what's opening or closing. I have to think the ones that he traded today were to close. So I have to think this was sold to close. This was bought to close. So he had short puts at 23 that he bought to close for a cent. And he had long calls at 28.50 that he bought to close at 4 cents. I have to think so. And then the other legs, he probably had 2 other legs on this and just let them expire. And then he sold 29 calls for next week and sold 23 puts. Something like that. That's my guess. Interesting. I'm pretty sure XRT is a nod to that. XRT, like short. Breadcrumbs. T-Rex short arms. Great minds think alike. It's possible that GMEU is just a hedge vehicle for short hedge funds. Should GME run? They're so short and it runs. If short hedge fund having 2x longs on the book could make them delta neutral, unregarded. I'm also regarded. I don't know what I'm talking about. Maybe. But they need to get those shares somehow. I guess if it's 2x leverage, that could be a way out of it. I don't know. Maybe. My understanding of these 2x leverage singles target that the underlying swaps. Yep, they do have a lot of swaps in them. They do have some shares so that they can use it for, because it doesn't matter how many they have. If they have like just some shares in there, then it can be used to do musical chairs. But they do have swaps. Unless they don't now. I mean, it looked like they started out with shares in it. Doesn't it like have a prospectus of their holdings? We should be able to see this. Here are their holdings, guys. Cash another. For negative 3,495,450 shares. Nice. But its value is just the dollars. Let's see. There you go, guys. Fund holdings. For your health. So this is running probably exactly as it's supposed to. It was not Ryan Cohen. It was the Tuttle Capital Management Group. Yeah. Salve. The DD of old refers to several stocks being in the same basket. Any thoughts on the observable 2.6 million shares available to borrow swing from peak to low every day this week? In GameStop? I didn't see it swing that much. It did swing quite a bit, but oh, excuse me. This is XRT. XRT got up there a bit. How about that? Where is, okay, this is GME. I only check data from Chart Exchange. Oh, it went back up there, huh? Shot up today again. Yeah, it was pretty high, I think, this week. Does it show? This is borrow fee. I wish we could see a chart where it was like shares available. That would be super cool. And we can just, do this. Yeah, we're in the 4 millis. Going back to last week. We were just kind of in the upper 3s and 4s for a while. For like a while. There's 17th. Yeah, we didn't get back down to like in the 2s 15th. So they're in 3s. Yeah. It gets updated. It just you have to go to the lower one here, I think. So it just means that there was no change. There are no changes, I think. But I could be wrong. Let me take a look. Yeah. But that should have been. There were just no changes. 12:55 Eastern Daylight Time, EDT. There's a 12:39. So it would have updated there and then just not. Yeah. So here it only just updated with the borrow fee change. Apparently there was a borrow fee change. Yeah. Ooh, new Ryan Cohen tweet. Let's see. Here we go, folks. What is this? Oh, hey. What is tefillin? Do we know what this is, guys? Ah, okay. 2 small black leather boxes containing Hebrew parchment scrolls with verses from the Torah. Did not know that word. Oh, and I see, and he's got them like on his arm and over his shoulder and like on his head, maybe a little bit. Does he have a podcast call this? Okay. Oh, here we go. My name is Yossi Faro, a 20-year-old yeshiva student, content creator from Brooklyn. I'm dedicated to inspiring the Jewish nation by rapping to fill in with influential Jews across various industries, including Hollywood, Wall Street, the startup world, social media. Some of the remarkable individuals I've had the privilege to rap to fill in with include Emmy and Golden Globe winning actors James Franco, Michael Rappaport, Jeremy Piven. I've also rapped with top charting Jewish rappers Lil Dicky and BLP Kosher, music mogul Scooter Braun, Shopify president Harley Finkelstein, Raphael Ilishayev, co-founder of the $15 billion startup Gopuf. Additionally, I've rapped with Nightlife King David Grutman and social media superstar Adam Ross on Livestream with over 75,000 people watching. Oh, so did he do like an episode or something? Oh yeah, this is what he does. He does this stuff. This is like his MO. Where's his show? Let's check this guy's channel.
How often do you rap these?
Not enough.
Not enough. Been working on getting Scooter Braun for a fat minute. Meant to meet him in the next 5 minutes to do to fill in. And not just do to fill in, we're going to, God willing, get a message to Jewish people, a message of hope. Scooter is one of the biggest fighters online for the Jewish people. Everything he's done for Israel, for example.
Let's see.
We're rapping to fill in.
Rapping to fill in. Are you Jewish? We're walking into Morning Brew HQ.
Interesting. So I wonder if he did a video or something with him. We could be seeing it. Actually, there was something that occurred to me. This is a good question. From Bodlondeb. So yeah, Alan Attal also put his shares into Schwab, just like Cohen did. So one thing I noticed, Citadel does not do business with Charles Schwab. Citadel does not use Schwab. Somebody did a post about, was it Region? I think it was Region Formal. Did a post here. Like earlier today. And I remember looking through this, and he was like looking at yeah, it might have something to do with it. Like Citadel has a ton of partners, does a ton of business with a bunch of major financial institutions, but Schwab is not one of them, which is very interesting. It may have something to do with that, considering the relationship between GameStop and Citadel. So I don't know. Schwab might be insulated maybe from some of this contaminant that has to do with GameStop. Yeah. Not sure. But that may be Schwab may be a safer brokerage to go ahead and put stuff there. And of course, I mean, if they intend to invest otherwise, then they can. I don't know if other institutions go into financial distress and they want to, hold securities otherwise. I think what they want to do is mirror GameStop's investments. They're allowed to do that. They're allowed to mirror GameStop's investments. So maybe they want to do that with a brokerage they can trust. It's not going to screw them. I don't know, man. Oh, okay. No, I don't know what's going on with Chewy Lenpool. He can do everything. He is the everyman. He is the any man. He is the perfect man. He is the goddess. I do not know. It could be. Actually, yeah, isn't it? Yeah, I think so. What is this here? I don't know what this is. I don't know what you're talking about. I don't know what this is. Anyway. Yeah, so interesting, right? We thought Ryan Cohen was going to do some podcast stuff. Maybe I'll keep an eye out if we get an episode with this guy. Yeah, but that seems to be the case. What's going on with this double leverage ETF? Interesting. Maybe do a little bit more digging on some of the stuff J2B is referring to. We'll have to keep our finger on what is going on with these rebalances. So maybe something of an event, right? Maybe it doesn't look necessarily just like last year, but maybe we do see a continuation, a little nice 5-week move, something post May, like May 5th. Into first week of June, like June 5th. I know Richard's really looking forward to June 5th. Interesting to see, his thoughts on this over the weekend. He's great about posting stuff over the weekend. So we'll see what his, we'll get to look at his thoughts over the weekend. Highly encourage you to go take a look at, at Richard's, sheet, at his data. As much as he can, right? It's a really excellent resource. Can't commend him enough on putting that together. We'll have to see. We'll have to see. Also, how his model turns out here going into next week. I mean, interesting to learn from Who Loves Avocado here that these Chewy swaps are gone now on the 5th. That they've been closed. But nonetheless, that was an interesting sort of synergy there ahead of time. So, I think we'll go ahead and wrap up the stream for now. Another great session together. Let's see what kind of interesting spice we get added with Tuttle Capital added to the mix. But we'll see you guys. We'll do another live stream next Friday, May 2nd. See hopefully we don't correct down too hard, but something to give some more buyers, like people maybe who missed the train to the upside the first time around. Can potentially get a handle on things this time around. Maybe get a chance to expand their positions or something like that. Who knows? We'll see. So thank you very much, guys. Thank you very much as always. We will look forward to seeing you guys, next week. And on Monday we'll have our daily newsletter breakdowns once again. Be looking at things, but always a great time. Thank you so much, as always, for your contributions. Thank you for your questions, participation, all of the above. We'll see you guys then. So thanks very much. Have a great weekend, you guys.